So how do I create this income for my retirement?
There's a variety of different ways to create profit in real estate. Of course, there's mortgage reduction. The tenant is your asset for the first many number of years because they're paying off that mortgage for you. So once your mortgage is paid off, then you have that rent coming in, and even if you have 40% of that rent going toward repair and maintenance of your property, you're realizing 60% of that rent as pure income. Now let's talk about how you can make money. How you can create multiple income streams using cash flowing real estate as an investment. I can identify different profit centers in real estate. These are all pretty simple, and I'm sure you'll understand. You buy something, the property value goes up, we call that equity growth. So your property values do increase over time. Real estate generally increases in value. Equity growth is one profit center. Leverage, we spoke about earlier, is the ability to borrow money. So if you're buying something at a $100,000 unit, you're allowed to borrow up to $80,000 of that. That is leverage. That is what your tenant pays down for you over time. Your investment is only 20%. Improvements. If we buy something and add value, you get immediately a profit, or the amount of value you've added to the property is deemed as being profit. Mortgage reduction. This goes to where your tenant pays rent. So you collect rents, you use that rent to pay off your leverage or your mortgage, and every year, a certain amount of that mortgage is reduced in the principal amount. So of course you're paying interest on that money you've borrowed, but you're also reducing the mortgage amount. So over time, your mortgage from $80,000 investment can be paid off down to zero if you hold the property long enough. And then positive cash flow. In the interim, after all of your expenses are paid for from the revenue coming in, the net result is positive cash flow. There's also tax deductions and flow-through expenses. This is something you should talk to your accountant. Depending on your particular situation, there are different tax advantages to using investment real estate in different ways. So now, let's have a look at a model. And I'm going to use $100,000 just for the education purpose. So, based on here, $100,000 unit, condo, apartment. Over 25 years, this capital appreciation will deem that that property is now worth $210,000. So for the demonstration here, we're going to use a 3% per year increase. Many of the regions that we buy in have a higher or a lower, but we'll use 3% on average. 25 years, real estate values have gone up in Canada 3% a year. So our mortgage is $80,000. I'm using the 80% rule here. So your investment is the difference between the 80 and 100,000. So the requirement from you is $20,000 to acquire this $100,000 unit. You secure a mortgage with a Canadian lender for 80% of it. Over 25 years, you see that the tenant has paid rent and you've paid your mortgage payments. So your mortgage amount gets reduced to zero. So now the property is worth $210,000. Your annual income, which represents only 60% of the rent collected 25 years from now, is $12,000. That's $1,000 of income per month after all expenses are paid. On what? Only a $20,000 investment. So keep in mind, you've bought a unit for $100,000, you invest $20,000, there'll be some closing costs on top of that, but for the purpose of education, it's the 80 into 100 rule. 25 years is what we're doing. This is a long-term investment, and in 25 years now you have a property worth $200,000, you've invested $20,000, you're now earning an income because your mortgage is reduced to nothing, so you're keeping all of that rent, and you're putting 40% of that gross rent into repair and maintenance expenses on the building. So your annual income will show as $12,000. Are all of us here going to live another 25 years? Nobody really knows that, but based on what our life expectancy is, many of us will need income like this high into our 80s. So how do you secure your future using more than one property? One property is fine, but let's take this and multiply it by 5. So if you have equity or if you have investment opportunities right now, take that $20,000 and multiply it by 5. You can essentially buy 5 units. So now we're talking $500,000 for the value of the units now. And in 25 years, now you're worth $1,050,000. Again, highlighting only 3% growth per year. This is very conservative. So the capital appreciation will give you assets worth over $1 million. Again, you start with mortgages. 5 mortgages at $80,000. You start with $400,000 worth of mortgage. Allow those tenants to pay off that mortgage for you. So $400,000 in mortgage reduction over 25 years. Now your income on clear title properties is $60,000. So 60% of the gross rents again. We're keeping everything very conservative. The net proceeds to you will be cash flow. These are multiple income streams. So you have 5 properties, the rents are collected, the cash residual is deposited directly into your account. $60,000 annual income for investing, only $100,000. $20,000 per unit on 5 units. This is very simple to understand how you can invest 20% of the purchase price and have that pay for it over time. The tenant is essentially the asset while they're paying off the mortgage for you. You're managing your properties through very good property management and enjoying the tax benefit throughout. All of the interest you've paid on these mortgages is a tax deduction off the income that you're receiving. At the end of the day, when we're 85 years old and we have multiple properties, they've been paid for by a tenant and we have residual income here. Multiple income streams. So how can Street Smart help you create an income you can't outlive using rental revenue properties? All right, so let's recap and how working with Street Smart can help you solve many of the issues you're faced with today. The uncertainty of becoming a real estate investor. We like to say that what makes Street Smart different? We provide investment opportunities using cash flowing hard assets. This is what we do, real estate, something you can leverage, something you can borrow against. We also mitigate the risk. Because we're buying into this project as well, we do our due diligence, we mitigate the risk, we have good professional property management, and that removes the risk from you as the unit owner. We invest alongside of our investors. I can't stress this enough. This is a project that we're going to buy into, and we're sharing our information with those who would like to learn more about that particular property, that particular region, that particular location. We also believe in easy to understand and simple investments. We will provide step-by-step how to invest in real estate. Each opportunity you will be giving all of the information you need to determine whether that's an investment that you would like to partake in. We also offer turnkey investment services. This goes back to providing the property, but also providing the financing. Verico is a mortgage division that we have in our office. We're mortgage brokers, so we understand what the lenders need to know to determine whether or not you can get financing on that property. We also like to build trust and respect with each of our investors. This is something that we don't take lightly. It's a culture that we all believe in our office, and building trust and respect is paramount in you becoming a Street Smart investor client.